Let's look at the retail sector now, because we've had the numbers out for the first quarter from Ernst Young and also the Bureau for Economic Research. When we talk about the retail sector, there's all sorts of things to consider. It's not all one thing. It's like looking at the all share and saying it's an autonomous unit. It's not actually. Food, clothes, furniture, perishables, semi-durables, durables have all got to be taken into account and all have differing performances. But listen to this. Results from the latest Ernst Young and BER retail survey revealed that trading conditions continue to deteriorate and the growth in retail sales volumes slowed further during the first quarter of 2013. In the studio in Johannesburg is Derek Engelbrecht, who's the retail and consumer product sector leader at Ernst Young. Overall, not a great picture, Derek.
No, Lindsay, I think you're quite right. At a headline level, growth slowing, pedestrian performance at best, and then of course, as you had said, different parts of the retail sector really benefiting, or in this particular case not benefiting from a number of macro trends.
Yeah, the macro trends that you set out are quite startling, actually, especially that fuel price increase, which is something like 22%. I mean, that's an inelastic demand. So, of course, it comes out of people's pockets and therefore you can't spend at the retail level. That's the most startling thing to me.
That's quite correct. I think the fuel price increase since the August or mid-year 2012 is up about 22.5%. We also have rising grain, meat and vegetable prices to contend with. And then, of course, the effective new rates negotiated by NERSA on behalf of the consumer from an Eskom perspective also kicks in very shortly.
Yeah, so all these things are standing in our way, but on the other hand, some people might say, well, the worst is out the way. The rand went to 9.36, it's now 9.05, so therefore that'll put some more money in our pocket probably, because the oil price has also fallen precipitously over the last week or so. It's currently down just below $105 a barrel. So on the one hand, the future looks a little bit bright, but let's have a look at these numbers you're talking about. What were the worst performing sectors?
The worst performing sector, or the sector that continues to be under pressure, is the durable sector. So that would be the non-durable sector, the food and beverage sector, where the impact on the consumer is felt across a much broader part of the South African population, and consequently margins continue to be under pressure, with the growth from a volume perspective to continue to be on the downward side.
Okay, and on the positive side of things, is there anything that are showing sort of green shoots, if you like?
The durable sector surprised on the upside. One needs to take into account that, of course, that's being compared to a base where they've been battling for the last 2 or 3 years. But when one looks at the relative performance in the first quarter of 2013, that is slightly better than anticipated and quite frankly measured in the fourth quarter of 2012, which in some way can also be ascribed to maybe some preemptive buying post the festive season by consumers that fear the impact of continued depreciation of the rand against the dollar and the obvious imported cost of that important segment of the economy.
Of course, we can talk about the semantics over a 2 or 3 month period, or even a 6 or a 12 month period. But the key point about retail sales growth in South Africa is one thing, and that's people's ability to spend money. And the only way they can spend money is if they have jobs. And quite honestly, the latest figures that we've seen have been, it's a few encouraging signs. But unless we create jobs, the sort of report that we're reporting on now is going to be the norm for the next year or so.
I fear that you're absolutely correct. The back half of 2012, there was very poor job growth prospects, and unfortunately nothing significantly has changed in the first 3 months of the current year that will substantially change that picture. So I fear that you're absolutely right. Without a sustainable job creating initiative, we will be looking at this kind of trend for the next 2 or 3 reporting quarters.
What do we do then? Is there anything that the government can do? Is there anything the Reserve Bank can do? Can a cut in interest rates boost this retail sector? Or is it as simple as we've just mentioned, i.e. job creation, money in people's pockets, and hopefully some of these administered prices that we've been speaking about, or prices beyond South Africa's control, coming back to a more sort of equanimous level?
I think the part that you mentioned with regards to a stabilizing rand-dollar exchange rate, But that's also a factor largely outside of the control of the economy, although there's a potential to influence that in the way that we message the story of South Africa and Africa Incorporated to the outside world. But there's no doubt that the ability to influence it in an environment where inflation rates are already at a historical low to a large degree makes a number of the traditional instruments not as impactful as it may have been in the past.
Very quickly, I'm just going to read the last paragraph of your report. It says, looking ahead, the growth in retail sales volumes is likely to remain subdued over the next 6 months as both real income growth and credit extension is expected to slow on the back of weak global economic growth, etc., etc. So exactly what we've said. Just give us something to hang our hat on there. Throw us a little bone. Any hope out there?
Unfortunately, when one looks at the kind of adjectives describing the next 6 months, you get to the unfortunate situation where there's 5 or 6 items which definitely points to the risk on the downside. I think at this particular point in time, if we could stabilize the impact of particularly energy costs, and it can reduce to a more manageable level, both through the decrease of the international oil price as well as a more impactful rand-dollar exchange rate, that in the shorter term will certainly put money back into people's pockets, which they'll then have the ability to have more discretion over.